Good morning, grade 12 learners. Welcome to today's accounting lesson. My name is Beauty Mpanza. Today I'm co-presenting with Vuyisile Deluhlaso. This lesson is proudly brought to you by Gauteng Department of Education. I need you to remember that this is an interactive session. Therefore, our WhatsApp number is written there on the bottom of your screen. It is 064 748 8913. I'm going to repeat this number, 064 748 8913. Remember that we are going to look at our paper 1 topics. We are continuing with our paper 1 topics. Remember to keep your calculator because we are going to need it as we interact with you. And also keep question papers for 2017 NSC November, and also the question paper that you have just written in your 2021 trial examination. Those are the 2 question papers that you are going to interact with. And make sure that you also have a calculator because you're going to have to do a lot of calculations. And please, if you have any question that you wish to ask, just type it in. If you cannot use the gadget, the computer, please ask your teacher to assist you. And then also are going to address all the questions that you are going to ask us. Remember, we need to interact. These are the objectives of our lesson for today. We are going to look at paper 1 topics, as I have already mentioned to you. Remember that the paper 1 topics are done in your term 1. We complete these topics in term 1. And we are going to look at the statement of comprehensive income. That is your income statement. So we shall be using those words interchangeably. We will also look at the statement of financial position, and that is referring to your balance sheet. And we will use that also interchangeably. So don't forget. And then we'll also look at the cash flow statement. As we move along with the lesson, we are also going to give you tips on how to respond to the questions. Also, speak to how the marks are allocated for, certain or even specific calculations. I'm now going to take you through the format of the balance sheet, statement of financial position. This format is very important. It's very important because most of you don't do well in an exam when you are supposed to respond to the balance sheet. This area is normally not given enough time. I did not project the income statement because there is another presentation that is going to cover that. It will be coming soon to your classrooms. When you look at the income statement, the balance sheet format, you will see that there are 2 broad categories. Your assets on top, and the composition of your assets will always be your non-current assets and also your current assets. And then that will give you the total assets. And then as you go down through your structure, you have your equity and liabilities, and you will have your capital and reserves, have your non-current liabilities, as well as current liabilities. It is very important that you are familiar with the structure because you are losing so many marks in an exam because now you misplace the items, even the figures, and you get penalized for misplacing, the items. And then you will find that there are different types of the balance sheet. There is a straightforward balance sheet, which is a top down, where you'll be doing your calculations from the top downwards. And then there will be other balance sheets where you are expected, to move from the bottom. For instance, let us say maybe your figures or the figures that are given to you do not have some of the figures are not provided. They have provided only a few. Therefore, you need to navigate around your format of the balance sheet in order for you to calculate. Let us say maybe in this case, you were given many missing figures from your assets. and the figures that were given to you for your equity and liabilities according to the information that is given to you are sufficient, then you will work from the bottom. You will take this amount, normally your capital and reserves or your shareholders' equity. You take that, remember, it is the composition of your ordinary share capital as well as your retained income. So you will take that total and then also take your non-current liabilities. Normally under your non-current liabilities, we will only have one item, only the long-term loan. Therefore, you will take that total. We don't normally allocate marks to that total because it is the same as the amount that will be given to you here, or the amount that you would have calculated also. Then also you'll go down through your structure and then take what again? Your current liabilities. Then you will combine everything. Once all this information is combined, you get your total equity and liabilities. And your total equity and liabilities is the same as your total assets. It will be the same as your total assets, because now when you do your balance sheet, you need to know that it must strike a balance. Your assets and the equity must balance. Therefore, in an activity where you are not given all the figures, then you will know that you will take this figure here and write it here, and we will give you a method mark. Even if a figure cannot be correct, you will be given a mark for just applying the correct process or even the correct principle. And it's very important for you to know that as you look at the structure of your balance sheet, I want to take you up there to your non-current assets, your fixed assets. There is a first item that we have, your fixed assets. Remember that our fixed assets are prepared separately in note number 3. We are going to look at note number 3 today. They are prepared there separately, and this is a very important note. You find it in each and every exam. Then the net figure, or the total amount after all the deductions were made, will be brought in here. It will be brought into this structure. So you will not see the depreciation, the cost price of the asset. You will only see the carrying value of your fixed assets in this format of the balance sheet, because we cannot disclose everything. And then as you go down, you will see we have our financial assets and we have the fixed deposit. And this is long-term investment. But if there's anything that is going to mature in the next few months, or even 12 months or 6 months, you must know that it will come to your cash and cash equivalents. It will be categorized as your current assets. You need to remember that because it's very important. That's where you lose marks. And if there was any calculation in your fixed deposit where you were told that a certain percentage is going to be paid in the next 12 months, whatever percentage that you shall have brought down here, we will give you a mark, because you might lose a mark when calculating that percentage here under your fixed deposit. But as you bring it down to your cash and cash equivalents, we are going to give you a mark for that, because it means you understand. And this applies also to your loan. If you go to your non-current liabilities, remember we have the mortgage loan, which is payable over a long period. And the activity or even the question will say to you that a certain portion or 20,000 is payable within, the next 12 months. Therefore, in that case, you will also bring it down here. And we are going to give you marks, just for doing it. If there was a calculation that was involved where you had to determine the short-term loan, in that case you may lose here, but we will definitely give you as you bring it down here. And these are the marks that are always, there in the paper that you can just grab. Every paper will have your long-term and the short-term loan. There'll always be a split. So that's where you can just check for marks. Okay, I hope you fully understand the structure. And what is important also with the structure of the balance sheet, I want you to look at the bottom, because a lot of people will ask questions that what happens to the short-term loans? With the short-term loans, you can record them under your trade and other payables. You will be still correct. Even if you can record them independently, so because we know that the resource material that you're using is not the same. In some of the books, it's presented, differently. Therefore, you can just write it in any of those two areas. And then also under your trade and other payables, you will find that also we write the shareholders for dividends, the amount normally for final dividends, because there is the figure that goes to the balance sheet which is not yet paid. Remember, if you declare the dividends, it means you have not paid. You have promised your shareholders that you are going to pay them, but they are not yet paid, and that creates a liability. Once you declare, a liability is created, and as a business, we need to commit. And then you will see also there is, you will come across to your, the calculation of the tax. Remember again, if there is any taxation that is owing, that has not been paid to SARS, it will also affect this area of your balance sheet. You will record it under your trade and other payables or creditors as it is written here. Or you can just write it here independently so. And we will give you also a mark for that. But it is important for you that now with the bank overdraft, you can't write your bank overdraft under your trade and other creditors. It is classified as a current liability, but it must be a stand-alone entry. Therefore, it cannot go to your trade and other payables. It must appear. Remember that normally your bank, if it is a favorable balance, your bank, if it is a favorable balance, it is going to appear under your cash and cash equivalents. And I'm so worried because I'm not getting any communication from your side. Remember that our session is interactive. Please phone this number. We are waiting to respond to your questions. 064 748 8913. Okay, I'm going to take you back now to our bank overdraft. I was saying to you that it must be disclosed all the time. Remember that there are many parties that are interested in your finances. Therefore, you must always declare, disclose. You shouldn't hide your bank balance to the potential investors, people who want to buy from the company, who want to buy shares. You can't also hide this from the trade unions. If they are negotiating for the salaries for their members, they also need to know what is the financial position of the business. How does the finances of the business look like? And also, there are many other parties. You'll find that also the suppliers are interested in your balances, because if they want to give you money, they want to know if you'll be able to pay back their debts. I hope you all now understand the structure. This is so important. Then if you enter into an exam room, if maybe there are gaps that are left in your structure, the first thing that you do when you start with your question, or before you even start responding to all the questions, fill in the structures that are empty. Because I know that some of you are not going to sleep a night before, and remember that your mind will not work effectively if you are exhausted. So there are those who are not going to manage their time, correctly. Therefore, it's very important that as soon as you get into the exam room, complete all the structures that are needed in your paper 1. When you do your paper 2, you follow the same procedure, so that now by the time you go back to work to engage with the questions or even the transactions, you still have some of the information that has already been placed in your structure, so that you can earn more marks. And remember that our paper is very long, and some of you will be trying to catch up with time, and it's not very easy. We've covered this information already. I'm going to take you now to the activity that we are going to do. This activity is extracted from the 2017 November paper. I've indicated that already. I hope everybody has got a copy so that now you can be able to go back, to refer back to some of the information as we work together. What I'm going to do the income statement and the balance sheet adjustments concurrently together so that now you follow, you understand exactly. And remember, these are very important. And you know what? The balance sheet worries me. I'm worried because I didn't see it last year. We have not seen it also this year in our trial paper, the DBE paper that you wrote recently. So my worry is that it might come back, and our examiners love balance sheet because they know that we are spending little time on the balance sheet. We are not doing enough. And that is why we're losing a lot of marks. I have not adjusted the dates because I didn't want to confuse you. I said I'm going to sit with the old dates so that now you don't get confused as you go back to work with your structure. And remember that this paper, the 27 paper, it's a very good paper. Yeah, I know some of you might say that it's a bit oldish. It's very good. It has good transactions, adjustments. So I normally recommend it everywhere where I go. I want you to calculate the missing amounts that are denoted by A up to D. So that is what we're going to do for now. That's your note number 3. If you can check from the note number 3 that is given to you, the first part we need to calculate what? The carrying value. Remember, it's very important that you check the beginning of the year and also the end of the accounting period. Any activity that you do, you need to know exactly what is the beginning and the end of the current year. Okay, as you check, we have a missing figure, which is the carrying value. And then your number B, we are missing the depreciation. And C, we are also missing the carrying value for the vehicles. And then when you check now, number D is missing. Remember what I said to you? Only number D is recorded in our balance sheet. Only number D. The rest of the information is not recorded because now we will be taking the carrying value here for your land and buildings, your vehicles, as well as your equipment. So we report in our income statement in our balance sheet at the carrying value for all the assets. Okay, we're going to start with the calculations for land and buildings. That's our first calculation. A very easy calculation. And if you check, remember, we need to know that sometimes we have to work backwards. I will always, encourage my learners, everybody that I interact with, that learn to work backwards. And when you work backwards, you are going to change your signs. Look at your carrying value. It is given there. It's 2,550,000. And then during the year, we bought for 325,000. But if you can check, we were not giving the carrying value at the beginning of the year. And remember that our land and buildings normally they don't, depreciate. But in real life, they do depreciate if they are not well looked after. But according to our syllabus, we don't do that. We don't depreciate. We assume that businesses, are taking good care of their assets. Therefore, we are going backwards now. We're going to say 2,550,000 minus. Remember, this is a positive figure. This figure is positive. Therefore, because we are going backwards, we are going to subtract. And when you press your calculator, you will see that you will get a different figure, a smaller figure, because we added. Look at the transaction that we have here, the solution that we have. This is what I've done, the first step. And then this is going to be your second step. And then this is your answer. It's your 2,225,000 rands. This is your answer. And those were just easy marks. Easy marks for you to grab. I hope you have understood that. I'm going to take you now to the next calculation. I hope everybody understands, and I'm not getting any communication from your side. I'm getting worried. We are now going to calculate the depreciation and the carrying value. Remember, we will depend on the information that is provided to us. When you check here, the depreciation is calculated at 20% per annum on cost. Remember, we are dealing with the vehicles. Normally, your equipment will have, a different depreciation, or they will use a different method of depreciating assets from what is used for, equipment from what is used for your vehicles. The company has 2 vehicles on 28 Feb 2017, and that is our end of the year. One of these vehicles was purchased on 1st September 2016. One of the vehicles was bought during the year. And remember that if anything is bought during the year, it's very important that we draw up a timeline, or you use your fingers to calculate. That is going to help you a great deal. All right, but I will always advise people to say, let us start by calculating the depreciation for the old asset. And then from there, you will calculate the depreciation for the new asset. I want you to look closer at the activity. When you check, your cost price is 350,000. And then your accumulated depreciation is 315,000. And then your carrying value is 35,000 rands. That is your carrying value. And I want you, wherever you're sitting, to calculate the depreciation using that not 35,000, use 350,000. Remember that we are calculating at cost. I'm sorry about that. We are using the cost price. When you calculate 350,000 multiplied by 20%, it's going to give you about 70,000 if I'm not wrong. I hope there is an answer that you are going to get. And then you look at your carrying value. Your carrying value is just merely 35,000. And remember that you cannot depreciate an asset, in excess of its cost price. You can never do that. SARS will not allow you also to do that. Because remember, this depreciation will affect your income statement. It is going to lower your profits, meaning that now you are also going to pay lesser for taxation. So SARS does keep an eye on this because you need to be correctly billed for taxation. Therefore, you cannot exceed the value of the asset or the cost price of the asset. And I always tell learners, my colleagues also, I will say 350,000 and 315,000. If they are looking, very closer to each other, that is your cost and the accumulated. If they look very, closer, there's a small gap in between these two amounts. Therefore, it tells you that now our asset is going to be fully depreciated. We are fully depreciating the asset. We've proven that already, because if you calculate by 20%, that gives you, 70,000 rands, which is in excess of your carrying value. As soon as you see that, you just abandon that calculation. For you to earn easy marks, you will say 35,000 minus 1 rand or 1 rand. And then that is going to give you a depreciation of 34,999 rands. I hope you understand that part. Here's a depreciation that has been calculated for you. You can see from the slide that I've indicated that this is too big. This 70,000 is too big, and therefore we cannot take it. It's a very huge amount. Therefore, your correct depreciation is going to be this one, as I have already indicated it to you. This is the depreciation for our first asset. We are now going to depreciate our second asset. Remember, we need to split assets. If it's vehicles, if there's a new, there's an old, there's a sold, split them and do the depreciation so that you can be correct. Okay. Our depreciation for the second vehicle, or vehicle number B, remember that we bought that vehicle as per information that is given to us for 422,550. And then we're going to start calculating it. We bought it on the 1st of September, October, November, December, January, February. We've been having this vehicle for 6 months. Therefore, the depreciation will be calculated on pro rata basis for 6 months. And then that is going to give you 42,255. So your total depreciation for vehicles, it will be A plus B. So that's going to give you a total. And there is your total for depreciation. It's 77,254 rands. And then you will see the carrying value now, because remember that we still have to calculate C, which is our carrying value. And then our C, we will take 35,000, we take out, we add 422,550. Remember that now we are going down. When you go down, the signs will not be changed. It's only when you going backwards, you will change the signs. So we have our 35,000, add the new asset that has been bought, and we are also going to subtract what? The depreciation that we have calculated, 77,254. And then the net value there, or the carrying value, will be 382,996. That's our carrying value. That answers number C. Yeah. All right. Now we only have to calculate number D. Remember that those numbers, or even the figures that are written in red, have been done already. They have been calculated already. We need to calculate our D. And this is the amount that goes to the face of your balance sheet. Okay, let us check now. Our carrying value in this case, remember we are not depreciating. So we'll have our 2,550,000, and then we have 382,996. We have this figure, and then this is the figure that goes to our structure as we prepare our statement of financial position. I hope, learners, you understand this part. I was actually expecting questions, to come through, especially, when you deal with your residual value, and I'm not getting any questions from your side. It means our educators have done a good job, but I want to interact with you. All right. And then here's another structure which is very, very important. This structure is very important for you to understand. With this structure, you must always remember that if you are given note number 3, you will find that most of the information is not given to you. You have to work it out. I'm just going to demonstrate a few calculations because we don't have enough time. But I want you to go to your SIP material. Your session 12 to 16, it covers your tangible assets in full, the explanations, the breakdown of the calculations, because we know that these are critical areas of of the curriculum that you're doing. Therefore, go to those pages. It's page 69 to 78. After you have interacted fully with that material, I'm telling you, are not going to have problems. You will see a structure that is similar to this one. Like in this case, when you consolidate here your balance sheet, your note number 3, when you consolidate it, normally you will find that at the bottom, there is a cost price. This is the cost price I'm referring to. For you to get a summary of all the events that took place during the year, it's very important that you start here. You look at the cost. You take your cost, number one, all right? And then you come down to check the additions. Okay, you add. And then that is going to give you the balance. But in an event where an asset has been sold, you will take out the cost price of an asset. And that is an area that is giving you problems. So if an asset has been sold, you take the asset out, you remove it from your financial statements. Because it's no longer your asset, it's no longer benefiting you in the business. I hope I'm loud and clear. And anything that you take out when you're dealing with cost must be at cost. Even if you can decide to open up your ledger account, you will still take everything at cost. And then number two, when you deal with your carrying value, all right, with your carrying value, you are going to look at the carrying, I'm sorry, I want to say the accumulated depreciation. If you deal with your accumulated depreciation, you are going to take the accumulated depreciation at the beginning of the year. And then if there's any depreciation during the year, you will add the depreciation. But if you sell an asset, you are also going to take out the depreciation, the accumulated depreciation of that asset, the whole of it, and then you will remain with your balance of the accumulated depreciation that comes to this area. It's your accumulated depreciation at the beginning plus the accumulated depreciation, which is going to be written in your income statement, and then you take out the depreciation for the asset that has been lost. That has been sold, and in total, the total depreciation of the asset that has been disposed will be taken out in order for you to get this figure. And remember also there's disposals in this section. And if you are dealing with disposal, I want you to check under the movements. Line number 2, that is your D. The disposal at carrying value. If you are selling an asset, remember in this part of your movements, you will only reflect the disposal at carrying value. You will only remove that part. Because if you think logically, the cost has already been dealt with there, up there in your cost, and then your accumulated depreciation has also dealt with that. So what you do in this case, you just take the cost price, and then you subtract the accumulated depreciation, and then you bring the amount here. You bring it here as your disposal at the carrying value. So please interact with this document so that you understand it well, because this is also going to help you as you do your cash flow statement. If there are any assets that are bought or any assets that are sold, you will always need this structure to navigate, to move around in order to determine your figures. Either you go up or you go from top to down, whatever method that you decide to use. So this is just very important. Okay, this is the question. This is how the question is structured from the question paper. You are given the information, and then you can see that there are missing figures. Unfortunately, the time does not allow us to go through the whole, structure of our balance sheet. But after this presentation, I want you to go home or in class and sit and check the structure and complete it, because we shall have done all the parts that are important. Because remember that we still have to take you through the cash flow statement. So you will see that there are figures that are missing. But I'm going to take you through the transactions now. We're going to break down this information. All right. Let us look at the first one. A very easy one. Remember, you've got all the levels. So level 1, 2, 3. Okay. You've got 3 levels. And it's very important that if there are level 1 questions, you just, grab them and, get marks. Okay, when you check, the electricity is our adjustment. They are saying that the electricity account for February is a 5,006, and this was still outstanding, a very easy adjustment. And then from the pre-adjusted information, you are given 42,000 rands. That is the information that has been given to you, and that is the amount that has been paid for electricity. We have not paid 5,600 rands. We are owing. Look, this is how we're going to disclose this in our income statement. We are going to take that 42,000 plus 5,006, and then that gives us 47,600 rands. Remember that we need to determine our income tax. Therefore, it is very important that now we bring into account all the expenses that we have incurred as a business, even if they are not, paid for yet. We haven't paid yet. Okay, this is how it is going to be reflected in your note number 9. Remember, we don't disclose everything in our balance sheet. Therefore, for our accrued expenses, we are going to have 5,600 rands. Very easy calculation. And I need you to know that for calculations of this nature, you may not likely to see the method mark. You will get 2 accuracy marks. Because the examiner assumes that this is easy, this is what you have done from grade 10. So it's an easy calculation. There can be a method mark in this case. So make it a point that when you write your figures, you write them correctly so that now you don't lose. And also you have seen from the SBAs that we have been giving you during the year, that is how we have been allocating marks so that now you get used to that method of allocating marks. I hope that adjustment is understood. It's an easy one. Let's look at the provision for bad debts. Our question is, or our adjustment, the provision for bad debts must be increased by 270. And when you go to the previous structure that you have in front of you, we are only given 67,200 rands for our net trade debtors. That is the information that is given to us. And that begins to tell you that now, if it's net trade debtors, there are figures that have been taken out already. We've got other figures. And remember also with your provision for bad debts, we have already taken out something already. We have taken out the information, I'm sorry about that. We have taken out the information from that structure. Whatever that has been returned by the customers, it has been taken out. So the only thing that we need to take out is our provision for bad debts. But the question says that there is an increase in the provision for bad debts by 270. What I needed to say to you is that the best way of calculating your provision for bad debts is you will take your debtors control, subtract the returns by customers, the bad debts, they must be subtracted also. Once you get your net trade, then you multiply by a percentage that is given to you. You will multiply by a certain percentage that is given to you, and then that figure that you get from there goes to your balance sheet. But in this case, I need you to read it very carefully. They say it has increased by 270. There was a calculation that was taken out already because you take the full calculation. In your income statement, you will only take the difference of the previous year and the difference of the current year, which is an increase. This is the increase they are talking about. This is the amount that is supposed to go to your income statement under normal circumstances. But with this activity, because the examiner has clearly, pointed out to you to say that net trade debtors, therefore you need to take into consideration that there are figures that were already taken out. So this is how we're going to disclose it. Provision for bad debts in our income statement, because it must be increased. Then it will affect your operating expenses. When your bad debts increase, they are affecting your profits. But if maybe they had said it was to be reduced or decreased, that will go to our operating income. And then this will be recorded also in note number 5. Remember, we don't disclose it. It must appear as follows. We're going to take our net trade debtors minus 270. I'm sorry. So that is how we're going to complete this part. I hope you are still clear. Your silence worries me. The number is 064 748 8913. Please call us. Text us. I'm sorry. Don't call, text. Text us at this number. I'm going to repeat it again. 064 748 8913. We're looking forward to address your calls or your text messages. And if I say call, I'm saying that your communication, you must understand that concept that I'm referring to. Okay, let us look at the insurance. Is our next adjustment. Okay. Check the nominal account section. You have been given 30,200 rands. We are given 30,200 rands. An additional insurance policy was taken out on 1st November 2016. The annual premium of 10,200 was paid and recorded. Remember that this amount they are talking about here, when they say it was paid and recorded, it means it is included in your 30,200 rands. So there is an amount that has been paid in advance in this case. Remember that the year end is 28 February 2017. So we are going to start calculating. Remember, this policy is covering us from November, up to the next 12 months. It's for a 12 period, 12 months period. All right, we are now going to say November, December, January, Feb. So we only need to include in our accounting records or in our income statement only the insurance for 4 months. Remember that there is another insurance that we have paid for in our records or in our books as a business. But if you add everything, it gives you 30,200 rands. This is how we're going to record this amount in our income statement. We are going to have 30,000. Look, I have opened my brackets, and this is what you have to do exactly when you are dealing with the transaction so that now you don't lose the marks. Okay, we have our 30,200 rands. And then this is how we've calculated. We took that 10,002. All right. Remember, I said our expense for this year is only 4 months. So 8 months, we don't really need it. We are going to say 10,002 times 8 over 12. This is what we don't need. And that is going to give us what? 6,800 rands. And then we are going to take out the 6,800 rands because we don't need it for this year in our records. Otherwise, it is going to inflate our expenses. And that's not good. Okay. You will see now this is the amount that we are going to record in our income statement, 25,200 rands. Let us check our balance sheet. But in this case, we are not disclosing directly into the balance sheet. We will go to our note. Okay. Trade and other receivables, because they are owing us. We will record it there because they owe us. This is a prepaid expense. So as a business, if we have prepaid, we have paid in advance, that means now we've got an asset. We are going to record 6,800 rands only. That has been calculated here. I hope that is understood. Now I'm going to give you an activity to do just for 5 minutes. No, I'm going to take it down to 2 minutes because I'm looking at the time. I will just give you only 2 minutes just to read the transaction, to do few calculations, only 2 minutes. Look, the rent for February has not yet been received. The rent increased by 15% on 1st July 2016. And if you check, the total amount for rent is 108,450 rands. So we have not yet received the rent for 1 month. And we are told that an increase took place on the 1st of July 2016. So let us start working. Let us start doing the calculations. 2 minutes only. Welcome back, grade 12 learners. Remember that we said that our rent income for the whole year has been 108,450, and we have not received a rent for 1 month, and there was an increase in July, right at the beginning of July. I hope you have done this correctly, and then you'll be able to follow me also because we have gone through the question. I want you to check the spread of the months. It's very important that you do your timeline. There's my March, April, my March, April, May, all the months. But I want you to remember that February is our cutoff point. This is where our year ends. All right, remember that we have not received any rent for February. But we included that because it is an expense that has been, it is an income that has been incurred or received or earned. It's earned in this case during the financial year. I want us now to look at the months before the 1st of July. How many months do we have? We have 1, 2, 3, 4. We have 4 months before the 1st of July, and rent is at 100% in that case. It is at 100%. And then as you move to your July, August, September, up to January, we have 7 months, and the rent is at 115. You say 100 plus 15, it gives you 115. And then also for February, it must be 115. Okay, now let's do our calculations. 100 times 4 it gives you 400. And then 7 times 115, it's going to give you 805. And then in this case, we're only going to have 115 because it is just a rent for 1 month that is expected. It's 115. All right. Now what we are going to do, we are going to add 400 plus 805. We add these two. Okay? Because if you say 400 plus 805, it gives you 1205, 1205. That is an amount of rent that we have. It is equivalent to the rent that has been given to us, which is 108 and 450. So we cannot take in or include an amount that has been that has not been received. It's not represented here in our books. It's not there. It has not been received. Therefore, we are going to take 108,450. We multiply because we are looking for rent for 1 month. We are going to say 115 on top and then divided by this total. This is what we have. When you use your UK method, you look at the unknown and then you divide it by the known. Rent for 4 months plus 7 months, which is equivalent to your 1205, is known. But for February, it is not known. Therefore, we'll say 115 divided by 1,205. And then that is going to give you your 10,350. And this calculation is very important when you deal with your financial indicators or the missing figures in your balance sheet or any other statement. This method works very well. Your UK, you apply it all the time. You will see as we do our calculations. This is how we're going to disclose this in our income statement. We're going to take 108,450 at 10,350 because we haven't received that yet. And then that's going to give us the total. This is what we have earned as a business. We haven't received it, it's earned. Therefore, it must appear in our income statement. Let's see how it appears in our balance sheet or in our note number 5. Remember, in our note number 5, we will have only 10,350, which is an accrued income. I want you to go back and redo this calculation today before you forget it. I'm going to take you to the income tax. Let's look at the adjustment for the income tax. It says that it SARS for income tax. We've got a provisional tax payment of 209,000. This is the amount that is appearing in your trial balance. This appears in your trial balance, 209,000 rands. And then the adjustment says that net profit after tax amounted to 518. It's 518,000. And that was calculated after taking into account all the adjustments. The income tax is at the rate of 30% of the net profit. So in this case, we are given 3 figures. What we need to calculate is the income tax. The income tax has not been given to us. Income also before tax is not given to us. And it's always nicer that if we work backwards, you will see how we're going to work backwards with our calculations. And remember that 209,000 has been paid. But firstly, we must calculate our tax so that we know if we do owe something to SARS. So the calculation is going to tell us exactly how much do we owe. There's our calculation. I hope you can see it. Remember, we've been preaching UK. 518,000 is the amount that has been given to us. It's a known figure. What are we looking for? We are looking for the taxation. And 30% is our tax. 30% is equivalent to tax. Therefore, because we are looking for tax or taxation, we will multiply. This is going to be our numerator. We'll multiply by 30. And we are going to divide by 70. Remember that your net profit after tax, your net profit after tax is going to be, remember, we have 100% net profit before tax, and then a taxation, which is 30. I'm sorry, my handwriting is very bad. That's why I avoid to write all the time. And then you will see now net profit after tax is 70. So this is what we have. We have been given 518,000, and that is our net profit after tax. It is equivalent to 70. Therefore now, for us to go back to the previous figure, there was net profit before tax, we will divide by 70. You say 518,000 divided by 70. It will give you that figure. If you want to take it back, always you divide, because that is what is given. But for now, in this calculation, we need tax. We'll say times 30, and then we divide by 70. And this is a very easy, fast calculation. Remember, in an exam, you don't have time. But the longest method for you to use is to say 518,000 divided by 70%, or 0.70. And then that is going to give you net profit before tax, and then you multiply by 3. So this is a combination of those two steps that I've given you now. Therefore, our tax will be 222,000. Let us check. There's our tax. And I hope you have got this amount when you said 518,000 divided by 70. It should have given you 740,000. Let's see how it appears in our balance sheet. In our balance sheet, or in our trade and other payables. Remember, I said to you that we can record this in two ways. Right. So we're going to have our 222,000. This is our tax for the current year, minus what we have paid. And this is what we are owing. And remember that when we calculate taxation, sometimes we'll find that we have overpaid SARS. Normally that will go to our current assets if we have overpaid SARS. But in this case, yeah, we are owing. Let's look at the final dividends. Here's our adjustment. We are not given ordinary share capital from the activity. It has not been given to us, but I want us to read the statement together. 75% of the authorized share capital of 900,000 was in issue. So as a business, we have issued 75% of 900,000. We didn't issue everything. And the directors declared a final dividend of 20 cents per share on 28 February. Remember, I said initially that your final dividends will definitely appear in your balance sheet, your statement of financial position. So this is our calculation for that. We're going to say 900, you authorized, multiplied by 75 cents. This is how you can also express it. I mean 75%, I'm sorry. 0.75 if you want to save time. It's 0.75. And that is going to give you 675,000. So the number of shares that are in issue, it's 675,000. And they've just told us that 24 cents has been declared for each share. Therefore, we are going to multiply the 675 by 24 cents, and that is going to give us 162,000. This will appear in your note number 8 under dividends. Remember, there are two classes of dividends, your interim dividends as well as your final dividends that are still owing. They have not yet been paid. but we have paid the interim. Right. Let's look at how this is going to be presented in our note number 9. We are going to record 162,000. Remember that also we said we mark you. If you decide that you record this in the face of your balance sheet, you don't record it under trade and other payables. If you decide to record it separately, we will still give you a mark for that. You are correct. I hope that has been understood. We're going to take you to the loan now, the calculation for loan. Oh, unfortunately, I don't know what happened here, but it's fine. We'll continue. Look at the statement for loan. I wanted to engage you first. Let's look at the statement for loan. Our statement for loan, it has a 376,000 opening balance at the beginning of the year. And the installments that are including interest amounted to 92,000. And the capitalized interest amounted to 48,000. It is nice in this exercise because now they have given you everything. And then the balance at the end of the year is not given. You are not given the balance at the end of the year. If you are supposed to prepare the balance sheet, you need to determine the balance at the end of the year. You need to calculate it because that amount goes there. Okay, I'm going to take you through the calculations. I'm worried. Okay. I'm worried because very few people are responding. I just want to, because I've started with this calculation, there's a request that I go to loan. I will go back to loan after I have dealt with this calculation so that now everybody understands very well. I will take you back to that calculation because we need to respond to your request. Okay, let us look again. The opening balance, it's 376,000 at the beginning of the year. And then the interest, which is included in the installments, which is included in the installments, is 92,000. It's 92,000. As you check, your interest capitalized, it's 48,000. It has been separated. Okay. This is a very easy calculation because for you, when you are supposed to prepare your income statement, you don't have to determine now your interest. It is already given to you. The interest is given to you, and then you're going to write it here. As your 48,000, this is where you're going to write your interest expense. It's just an easy calculation. The only thing that you have to work with is your the balance at the end of the year. You're supposed to calculate the balance at the end of the year. All right. But you're giving too many figures here. There are too many figures that may confuse you here. You need to be very careful. You are now going to take your 376, the opening balance. Remember, we want to determine what? We want to determine the balance at the end of the year. It's very easy to do it. But let me show you how are you going to enter this in your balance sheet. Right. In your balance sheet, it's going to be structured very differently because you will start with your 376. All right? You will start with your 376,000. And remember, our interest during the year was 48. You must add. It's going to be 376 plus 48. All right? And then once you are done with that part, you will take out this 92. You must take out the 92,000. You must take it out so that now you get the correct balance. Remember, we don't have this information as a business in our books. We are relying, from the bank to actually provide this information. We might have worked out, our balance for the loan in our books, but we don't know in terms of the calculation of interest, because remember that also the interest, will move. It's always fluctuating. It depends with the interest rates. Okay, you will see that now, once you do these calculations, you need to always remember that when you are given the open balance, add the interest. And then you are going to subtract now the interest and the payments. Remember your payments, their composition is, it's interest plus the capital. So when we repay as a business, we are repaying the interest and the capital component. So that is your 92. So when you do your calculations, you are going to get a 332,000. This is the amount that we are going to have now in the business as our adjustment. If we have to prepare the trial balance at the end of the year, we're going to reflect 332,000 in our business as a loan or long-term loan. But you remember in the question they have said to us that 50,000 is payable in the next 12 months. We are now going to take it out. We say 332 minus 50, and then that is going to give us 186. I don't think my calculation is right. Yeah, it cannot be this figure. So it's going to be 332. Yeah, it's 280 something. 332. Please correct from your side. Also, it's 332 minus 50,000. And that is going to give us, yes, 282. So this one is not correct. It's 282,000. So this is going to be our long-term loan. It's payable in the long term. I want to show you another way of calculating the balance of our loan account. For the mere fact that you have already been told that our capitalized interest is equivalent to 48,000, and our installments, including the capitalized interest, it's 92. We are going to say 92 minus 48. 92 minus 48, and that is going to give us 44,000. All right. We are going to get 44,000. It means now when you split this amount, your 48,000 is for interest, and then the 44,000. Okay, it's 92. Let's split. There's your 44, and then there's your 48. We said interest is 48,000, and then our 44,000 is the capital repayment. So the easy way to calculate the balance at the end, you will say 376 minus 44. Let's see how much do we get. 6 minus 4 will get 2, and then we'll get a 3. So we're getting the same figure as here. Okay, we set it 376 minus 44, and this is how we got 44. We set 92 minus 48, it gave us 44. And then the final answer is going to be 332. And that is the shortest method of calculating your closing balance of the loan. And remember, it's very important that you actually explore all these methods, because now the time that is given to you in an exam is too limited. You may not be able to finish. I'm going to take you back now to the rent income. There was a request that we repeat the calculations on the rent income. I'm taking you back to that. Okay, remember that the question said to us that the rent income according to the pre-adjustment trial balance amounted to 108,450. That was the rent income. And the rent for February has not been received. That is 28 February is the end of our accounting period, and that's our cutoff point. The rent has not been received for February. We only received for 11 months. And the rent increased by 15% on the 1st of July 2016. It increased by 15%. Okay, here's our structure, here's our timeline. We have written all the amounts. It's the months 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 4 of your first 4 months, or the first 4 months, you are receiving rent at 100%. That is why we said 1, 2, 3, 4 months times 100. Because rent is received before the increment of 15%. Therefore, you get your 400. And then for the remaining 8 months, but we are going to split the 8 months. We will have 7 months. Okay, our 7 months up to January, okay, is going to be 7 times 115. Remember that 115, we said 100 plus 15%, and then it gave us 115. And then we are going to have our 115. And 115 times 7, it's going to give us 400 rands. Remember that we said we are not going to write any amount here because we have not received anything here in this case. We just have only our 115 that is outstanding. So what we are going to add, it will be 400. We have received that. Plus 805. Because when you multiply these two, they give you 805. Then we are going to add what you have received as a business. It's 400 plus 805. That's going to give you 1205, a total. This is the total that you have received. And then now from there, we will say rent for 1 month has not been received. We take 115. Remember, we have 115. We're expecting to receive it at 15%. 15% plus 100, which is 115. Then our calculation is going to be 115 divided by 1205. Remember, I said to you that 1205 will exclude the calculation for 115 because that is the rent that we have not received. It is not represented in a 100, 100 and 450. I'm sorry, 108 and 450. I'm talking too much. So our calculation now is going to be 115 divided by 1205 times 184.50. And then that's going to give us 10,350. And I hope you have understood now this calculation. I hope it's well understood. And I said this is how we're going to enter this. This is how we're going to disclose it in our income statement as well as in our note number 5. Okay. Hopefully it's understood, it's captured now. Okay, we've done this one. This calculation has been done. I'm trying to go back to our calculations. Yeah, it was quite a jump. Yeah, I think I'm going to hand over now to my colleague who is going to take you through the cash flow statement. And in our next session, we are going to look at the indicators that are integrated. We are not only going to be looking at the integration with the balance sheet, but we'll also look at other financial statements that can be integrated with the indicators. So he's going to take you through the cash flow statement. Thank you.
Do you know that you are different? Do you know that your fingerprint is different? Is different from your peers, from the people that you are studying with. So do not compare yourself with your peers. Do not compare your results with what they're getting, because you are different. You have your own talents and skills, and also you have your own gifts. Embrace what you can do. Always put in the work to make sure that your results become better than what they were yesterday. But do not compare yourself, because when you compare yourself, you do not know what another person has, and they do not have what you have. So believe in yourself. You are different, and keep on putting the work.
Good morning, Mense. And today, as my colleague said, we will be dealing with financial statement. She started with balance sheet as well as income statement. So I'll be doing cash flow with you. We took the preliminary paper that you just wrote not so long. So we'll be taking you through the cash flow statement. The question paper had a fully fleshed question paper, but it is also important to know that not always in an examination you will be asked a fully fleshed question in terms of cash flow statement. So you must know all the items that falls under cash flow. The question is as follows. You are required to do these financial indicators as you see on the screen, and you are also supposed to complete the cash flow statement. We will start with our cash flow statement, then later we'll go to the financial indicators. Okay, the information is as follows. This is an extract from your income statement. It is very much important. Hence, my colleague started with income statement and balance sheet. What is also important, Mense, is to make sure that you know the accounting slang. Because if you do understand the jargon of accounting, it will be easy for you to master this financial statement. Then we also have our balance sheet. This is the information of balance sheet that was extracted from the question paper. Then we also have additional information, but for each question I will take you through all this information so that you know where to get the information to answer specific questions. Okay, then for cash flow, please remember, for cash flow, this one I want you to master it. Cash flow, you will be given 2 years. And on this 2 years, you must know that always your opening balance, make sure you capture this one. Your opening balance, you must make sure that you do as the examiner have said to you on the paper. If they say it's a debit, make it a debit. If it's an asset, you know that it will have a debit balance. If it's a liability, you know it will have a credit balance. Also, if it's an owner's equity, you must know that it's a credit balance. So, but for the closing balance, you must do now what? The vice versa of what the examiner said you should do. But I'll take you through so that it is easier for you and you are able to master this. For question 1, you were supposed to complete the income tax paid. Remember, the income tax paid, you'll get it from the first part of your cash flow under the cash flow from operating activities. So now, if you have 2 years, like I said, please don't forget, Mensene. You'll see this line of mine. I call it a love arrow. That's how it is. Where it starts, that is your opening, and where it ends, that is your closing. So remember the two things that I just mentioned on the previous slide. I said for the opening balances, you do what the examiner told you to do. And for the closing balance, you do what? You do the opposite. So let us check how do you answer this when you are in an examination. So now, when you do your income tax paid, remember, some will prefer a calculation method. Some will also prefer the ledger. And most of us, we call the ledger emergency room, because if you can master the ledger, definitely you will never go wrong. So let us check our income tax. How do you do it? When you do your income tax, remember the information that was given to you. There you are. That is your SARS income tax. Your SARS income tax, you will start with your opening balance. Remember now, according to this, I said the opening balance, you do what the examiner told you what to do. If you check your opening balance, the examiner said your opening balance, it's a credit balance. So it means now when you do your ledger, you must have a credit balance, which is 23,800. So you'll put 23,800 on your credit balance. But when you do your SARS income tax, remember, your income tax doesn't change. It is always on the credit side. So according to the information that was given, your income tax is 415,200. So you put 415,200. Remember, this one, it doesn't change. This one was your brought down. Then now, for the closing, remember what I said for the closing? The examiner said the closing is debit. But for you now, you do what? You do the opposite. If the examiner says debit for closing, for you, you do, you write it as a credit balance. So let's do it. Then we put it on the credit balance. That will be your 4,005. You add this. The amount we are looking for, it is our bank. This is the amount, which will be the same as this, 443,500. And one other thing that you must remember, it is that for cash flow from operating activities, all your items, your interest paid, your tax paid, as well as your dividends paid, they must be in brackets, because cash flow, we are dealing with cash. So that is the outflow of cash. And one other thing, just to make you remember this, in case you are in an examination room and you forgot, for cash flow, the first part, when I teach it, I will say always, I will say Clive. I will say Clive in deep trouble. Why am I saying that? It is because when you check the C, just for you to remember, the C for Clive will represent the cash generated from operation. Then the I will represent the interest paid. Don't forget that. Then the D will represent your dividends paid. Then your T, don't forget, it will represent your tax paid. So make sure you remember that. Hence I said it is important for you to remember your format in terms of financial statements. I hope you understand that one, Mense. The income tax, you must be able to calculate it, as well as your dividends paid, including your interest paid. Just to emphasize for interest paid, you must also remember that for your interest paid, not always your interest expense will be the same interest that was paid. So be careful of such transaction. Read the full question, Mense. Okay, let's go to the next part. Okay, our next part. Here is the information that was given to you. It means now we're going to calculate the second part of our cash flow, which is your cash flow from investing activities. Remember what I said to you, Mense? I said it is important to master the format. So now when you are doing the cash flow from investing activities, I want you to master your balance sheet. Why am I saying that? Remember, the first part of your balance sheet, you will have your non-current assets. You must know that your non-current assets are the ones that are speaking to your investing activities. Why am I saying that? If you check your fixed assets purchased as well as your proceeds of sale of fixed assets, those two, they come from your note number 3, which is your property, plant and equipment. But now your fixed deposit, that is your financial assets, which is your fixed deposit. So remember, the 2 makes your non-current asset. I said it is your property, plant and equipment as well as your fixed deposit. So these 2 are the ones that will do make your cash flow from investing activities. I hope it makes sense, Mense. Remember, let us check now. When you do this, you can do it in a calculation format, you can do it in a ledger account, you can also do it in a note format. So let us check the note first. Always when you do your note, you must know that the arrows, check the arrows when you go up. And also when you go down, you must always get the same results. It is important, Mense, when you go up and when you go down, you must get the same results. So let us check. Why am I saying that? On the question, remember I spoke earlier about the love arrow. You draw your love arrow. It is the opening. It is the closing. So your opening, here it is. When you go to your note, you put it as your opening balance. Here it is, opening. Then your closing, you put it there at the bottom. But remember, because you are given the book value amounts, there's no need for you to care about the cost as well as the accumulated, because the examiners have met you halfway. So already you have the book value at the beginning, you have the book value at the end. But remember, don't swap them around. Once you draw your love arrow, it will definitely help you to know which one is opening and which one is closing. Then now, the movements. When you check your disposal, it is important also whenever that you start writing, please check both your question paper as well as your answer book, because at times information can be given in your answer book. If you check here on the answer book, the 48,000, here it is, it was given to you. They said it's proceeds on sale of fixed assets. You must know that your proceeds from sale of fixed assets are the same as your disposal at carrying value. So you take the 48,000, you will write it there on your note. There it is, must put it in bracket as you know the note. Then the depreciation. Remember, the information will be given to you in the income statement. So you take the 234,000, you put it on the column for depreciation. It means now this will be the missing figure. Remember the arrows we said, when you go down and when you go up, the answer must be the same. It means when you take 8,320,300 minus 48,000 minus 234,000, it must give you 9,528,300. But when you do it, you see now, no, it doesn't give you that. It means you start from the bottom, you go up. So now the signs will swap around. You'll say 9.5 million plus 234,000 plus 48,000 minus 8,320,300. Your answer will be 300,000. That will represent your fixed asset purchase. So it is important, Mense, to know how to calculate the fixed asset bought And also it is important also to calculate the proceeds from asset sold. So it can be given either way. If you master the note, it will be easy. You can also do it in a calculation form. You can also do it in a ledger form. I hope that answers all your questions. Okay, let's go to the next part. You are given also the information from the balance sheet as well as an extract from your additional information. So this information, it will help us to calculate the cash flow from financing activities. On this one, Mense, you must listen to me very carefully. If you check, always when I have 2 years, I will draw my love arrow. That is your opening, that is your closing. That will definitely help you in an examination room. And not only when you do cash flow, always when you have 2 years, draw that line. It will guide you to know which one is the opening, which one is the closing. Okay, just to emphasize the cash flow from financing activities. Remember, I spoke about the accounting slang. Ne? Cash flow from financing activities, you must know this: total capital employed. If you know total capital employed, believe me, Mense, you will never go wrong. Why am I saying that? Remember, your total capital employed, that is your shareholders' equity from your balance sheet plus your non-current liabilities. So when you do your cash flow from financing activities, you must master these two: shareholders' equity as well as your non-current liabilities. Let's check why am I saying that. When you calculate your proceeds from shares issued, this one, you must be able to do your ordinary shareholders' capital. If you can do the ordinary shareholder capital, share capital, you will master this either in a ledger form or in a note form. Same applies when you do your repurchase, your funds used to repurchase shares. Remember, you must know your ordinary share capital. You must also know your retained income. Remember, that's when now the average price will come in as well as the amount paid above average price. So it is important to master those. Hence, I spoke about total capital employed. Once I'm there, also it also gives you an idea to say, oh, if I have total capital employed, it means I can be able to do the financial indicator return on total capital employed. So you see, men say these things, they go hand in hand. Hence my colleagues started with balance sheet. If you master balance sheet, go into cash flow, it will be easy for you. So let us check how do you do these calculations. Okay, when you do your ordinary share capital, we'll start with our opening balance. If you check already here, I've written for you the opening balance. It was 7,2. There it is. Let us check from the question paper. Here it is, 7,2. And now the closing balance, it is 8,2 million. Remember, the love arrow still guides you. So when you go to your answer book, remember I said, what must you do? You do what the examiner is telling you. Then you do what? The opposite. So ordinary share capital has it's an owner's equity, has a credit balance. So the closing balance, you put it on the debit side. But remember, on the credit side, you record the bank. Which bank is this one? It's when you as a company receive money after issuing shares. But the bank on the debit side is you as a company when you buy back the shares. Meaning now what are you doing? You are paying. So let us check how did we calculate this one. According to the question paper, they said on the 1st of March, ordinary share capital comprises of 800,000 ordinary shares, but a further 200,000 shares were issued on this day. So we are interested on this. It means this was the opening balance of shares that were issued. Then we issued a further 200,000, but we don't know at how much. We just know the number of shares that we issued. Let's check bullet point number 2. They said on the 29th of February 2020, the company repurchased 90,000 shares at 81,000 above. This is important, ne? At 81,000 above the value of shares based on the average share price of 9 rand 10 cents per share. It means now the 81,000, that was your retained income. Yes, your retained income amount. Why am I saying that? That was the amount that was above the average share price. You can even check it, how much was it per share. You can take 81,000 rand, divide by 90,000. I got 90 cents. It means now the amount that was above the average price, it was 90 cents. But remember, the average price was how much? 9 rand 10 cents. So in total, the shares that we bought back, we bought them back at 10 rand. But remember, the 10 rand is the total amount of shares. But now the 90 cent, that was your retained income. Then the 9 rand 10 cent, that was your ordinary share capital. I hope it makes sense, Mense. So that let us check how do we do it on the answer book. We set the opening and the closing, we recorded it. Then now, because we bought back shares, the average price was how much? 9 rand 10 cents. And how many shares did we buy? 90,000. So you're going to say 90,000 multiplied by 9 rand 10 cents. Remember, this one is for ordinary share capital. So you will get 819,000. That is the amount that we're going to pay from ordinary share capital. So here it is, 819,000. I hope it makes sense, Mense. Remember now, these shares that we are looking for, they were sold to the public. But how many shares did we issue? 200,000. We didn't know the price. But since now we have the two amounts on the debit side, we can add them and subtract the opening balance. You'll have your 1.9 million. That is your proceeds of shares issued. Why is it positive? Because we received money after issuing the shares. I hope it makes sense, Mense. Please remember, you can do it in a calculation format. You can also do it in a ledger format. It depends on you. Whenever you receive the answer book, make it favorable to you so that at least you know what you are doing and you're going to score those marks. I hope you are okay, Mense. Then let's go to the repurchase of shares. Remember, already I just said the amount 819,000, it was for repurchase. But the information that was given was that the 81,000 was above the average price. So you add the two, 819 plus 81,000, your answer will be 900,000. Remember, we are paying, so now it is an outflow. Or the other way, we did calculate the price that we paid for repurchase of shares. We found out that it was 10 rand. We also calculated the 90 cents on the previous slide. Remember, we said 81,000 rand, that was above the average price, divide by the 90,000 shares. We got 90 cents. So when you add it with 9 rand 10 cents, you got 10 rand. And how many shares did we buy back? We bought back 90,000. So 90,000 multiplied by 10 rand, you'll get 900,000. I hope it makes sense, Mense. Then now for the loan. Or maybe let me give you for loan. To give me the amount for loan that was paid or the loan that we acquired. Here's the information. Let me give you only a minute to calculate the loan. Then we'll do it together. Your time starts now then. the accuracy marks. This is a level 1 question. We are expecting everyone to score full marks. So it is a matter, actually even a minute was too much. Within 10 seconds, you should have known this. Remember again what I said. Love arrow will guide you. Let us do it together. I'll just write it here for you to remember. Loan. Remember I said when we started, your love arrow, the opening, what do? You do what the examiner is telling you to do. Loan, remember, it's what? It's a liability. It has a credit balance, 1.2 million. But again, the loan for the current year, it is still a liability. It won't change. Remember I said for the second part, what do? You do the opposite. So if it is a liability for you, you put it on the debit side now. Then how much was it? It was 900,000. Then you close your books. Then the debit side will be 1.2 million. The credit side must be 1.2 million. When you minus 900,000, how much will you get? It will be 300,000. But some of you, they don't know whether it is an outflow or it's an inflow. Let us check then. Because it is on the debit side and we call it bank, it means when you take the double entry, you remove it from the debit side of loan, you take it to your bank account. On your bank account, it will be on the credit side. So it means that is an outflow from 1.2 to 900. It means we paid our loan. I hope it makes sense, Mense. So here it is. It is 300,000 and it is in brackets. We okay, Mense? And one other thing I forgot to mention this. Most of the time, there are shaded places. Please, some of you tend to waste time writing on the shaded places. Those shaded places, they simply mean that there's no need for you to calculate those amounts. So please don't waste time writing on those shaded columns. Make sure that you only answer what has been asked to you. Okay, let's go to the other part. This is the last part for cash flow. To some, it looks easy, but believe me, it's not. The net change in cash and cash equivalents, especially when you have an overdraft, most learners, they don't know whether they must add it or they must subtract it. So let us check. I still emphasize my line. I can see you also talking about the love arrow, the opening as well as the closing. Let us check. If you check the opening, we had cash and cash equivalents and we also had a bank overdraft. Before you can do anything, you must find the difference between the two. So if you check, the bank overdraft was 220,000. Remember, it's a minus figure. Then we have cash and cash equivalents of how much? 5,000. So when you say 220 minus 5,000, you will have a negative 215,000. It means this part, you'll have 215,000. Let me do the ledger so that you see it. And you'll have your bank, you'll have 215,000. Why do I record it on the credit side? It is because it is a minus. But now, on the closing balance, they say cash and cash equivalents. It is debit. So if it is debit, remember what did I say? The opening, you do as the examiner is telling you to do. We found out that this is still an overdraft. So we put it on the credit side. But now for the current year, 56,500, it's a positive figure. I said you must do what? The opposite. It means when you do leisure, you'll put it on the credit side as 56,500. Let's add. When you add the 2, you will get 271,500. 271,500. So this 271,500, that will be your net change. Let's see how do you record it on the face of your cash flow. 271,500, it is your net change. Then your opening balance, remember these two figures. We had to calculate whether it's debit or credit? So the overdraft was more than the cash and cash. It was 215, which is negative. Then the answer is 56,500. So you can do it in the ledger. Remember I said, if you don't understand anything, go to your emergency room, which is your ledger account. I hope you understood those part of cash flow. And remember, not always you'll be asked a fully fledged cash flow. It will be categorized into those 3 items. Okay, Mense? Here is how your fully fledged cash flow was going to look like. Make sure you master that. Please, Mense, this one in an examination room, it is there. Make sure you master your cash flow statement. I hope the session that we did now for cash flow, you'll really go back, practice it, make sure you master it. Okay, let's go then to financial indicators. Financial indicators, it is important before you enter an examination room, don't memorize the formulas. Make sure you know them, even though the formula sheet is given to you, but you must master the formulas. Okay, let me just give you guidance on how to master these formulas. If you see a formula, actually not a formula, a financial indicator with the surname ratio. If you see a financial indicator with the surname ratio, I usually tell learners that they must remember a tennis court. A tennis court will have player 1 and player 2. So why am I saying that? All the financial indicators with the surname ratio, their answer must be X is to 1. So if you know the tennis court, it will make it easier for you that you know that there are 2 players, that will be player 1 as well as player 2. So let us check how do you do this. And now again, it comes back to knowing your structure of either your balance sheet or your income statement. So let us check. This one actually, you don't even need to check the formula because it speaks to you. They said you must calculate what? Debt equity. So when they say debt, you know that the debt is what the company owes. So it means the formula that is your non-current liabilities. Ne? Then is to the equity. What is the equity? The equity that is your shareholders' equity. Check now. We just did the cash flow. When you see these 2 items, what do you think? You must think about your cash flow from financing activities. So remember, I said when you do that, you must remember total capital employed. So when you know total capital employed, you must know already that your total capital employed makes your debt equity. That is your debt and that is your shareholders equity. In simple terms, that is your first part under equity and liabilities when you do your balance sheet. I hope the information will help you, Mense, when you do your revision. Okay, let us check. Our loan, here it is 900,000. There you are, you get a mark. Then your shareholders equity, there it is, you get a mark. Your answer will be 0.1 is to 1. And please, Mense, you must check always on your question paper, page 2. I think it's instruction number 6. They will say, make sure that your answers are written, you write a decimal after comma. Why am I saying that? Some of you tend to say if the answer is 0.5 is to 1, you convert it and you make it 1 is to 1, which is wrong. Don't do that. Always leave a figure after comma. So the answer will be 0.1 is to 1. I hope the information will help you. Let's go to the next one. Okay, the next question. Our next question. We suppose to calculate the earnings per share. The previous one I said the surname ratio, it means it must be the tennis court, which is X is to 1. Then on this one, if you see any financial indicator that speaks about these words, pair, you must know that this pair, it means a division sign. Why am I saying that? The formula here, it means you must know that that is your earnings. Pair, I said, is a division sign, so it is earnings divided by shares. Which shares? The number of shares that were issued. So let us check. Your earnings, remember, it is what you've received. So already also this, it is the financial income. It guides you. So your earnings, here are your earnings. This is what you got from your income statement, your net income after tax. So your net income after tax will be 968,800. But now I said pay, it's a division sign. You see it's a fraction. Then they say divide by a million. That is the marking guideline. But how did they get the million? Remember I said you divide by the number of issued shares. The information said on the 1st of March, the ordinary share capital comprised of what? 800,000 shares. Ne? But then they said a further 200,000 shares were issued. So you add the 200,000. So when you add this, it will give you a million. I know one learner is asking, why don't we subtract the repurchased shares? It is because on the question paper they said also these shareholders, they qualify to get these earnings. So be careful of such information. If they said they don't qualify, it means we were going to subtract those number of shares. So you'll have 968,800 divide by 1 million, multiply by 100. Then you will get 96.9 cents. I hope the information will help you, Mense, when you do your revision. Let's go to the next one. Okay, the next one, you are calculating your dividends payout rate. Please, Mense, also on this one, it is important to know your financial indicators. Also, the formulas are very important. Please keep on checking your formula sheet. So on this one, you can do it using the cents or you can do it using the rand value. Let us check then. How did you do that? When they talk about dividends, what are dividends? It means we have two dividends, the interim as well as the final. So you add the two. As the information was given to you, we have 28 cents, which is your interim. We have final, which is 12. So when you add the two, they will give you 40 cents. Remember, we just calculated on the previous question what? Earnings per share. You divide by your earnings per share, which was 96.9 cents. Then you multiply by 100. Definitely your answer will be 41.3. Or when you use the rand value, let us check. Remember at the beginning we had 800,000 number of shares. So if you say 800,000, let's do it together. 800,000 shares multiply by 28 cents. Remember, actually not by 28 cents. You say 200,000 plus 800,000. Why are we doing that? Because both your interim and your final were given on the last day of the accounting period. So we have 1 million shares. So when you say 1 million shares multiply by 28 cents, you will get 280. It means this 280, that is your interim, plus now your final is 12 cents. It's 12 cents. You will say 1 million multiply by 12 cents, you will get 120. This is your final. So when you add the two, you will get your 400,000. Then you divide by your 968,800. Remember that was your earnings per share. So earnings per share is the same as the one that we calculate previously. That is your net profit after tax, 968,800. You'll get 41.3%. As I wrap up, my time is almost over. Let's check the last one. The last one is to calculate the percentage return on average shareholders' equity. Just to emphasize this one, in mathematics, you are taught BODMAS. I hope everyone knows this. And this O, most people, they will say, stands for off. And now in maths, it's a multiplication. But now in accounting, remember I said pair is a division. So always in accounting, when you see on, when you see this on this, you must know it simply implies a division sign. When they say calculate gross profit on cost of sale, which is your markup, you know that that is your gross profit divide by what? Your cost of sale. So same applies to this one. It guides you. It said return on average equity. It means your formula, you know that is your returns. Then you divide by what? You divide by your average equity. What are average? Please, every time when you see average, it means you must multiply by 0.5 or you must have half. So that is your net profit after tax. As you see, here it is given. Then you take your shareholders' equity. We spoke about knowing the accounting jargon or the slang. So if you know what a shareholders' equity, definitely you will make it mense. You take your shareholders' equity from the previous year plus the current, you divide by 2. Definitely you will get your 11.8%. Please mense, don't forget the sessions are still continuing. Even accounting will be having another session before you write your final examination. Make sure that you sanitize. Social distancing, it's very important. Go online, download this presentation. When you do your revision, share with your learners. Keep on keeping on. At the end, you will definitely do it. I thank you, Mense.